PayPal is back. They had a very good earnings call today. Their report looked really good. PayPal is growing their top line revenue. It's growing the number of transactions that are going through its network. Overall, it was a very good report. I'll also point out that PayPal has had consistent growth in the last several earnings releases. The market just didn't like PayPal for some reason. And the market really realized today that maybe PayPal is undervalued and should be appreciated more. The stock has really gone up today on a day when the NASDAQ is down about 1.5% overall. A lot of technology stocks are down big today, but PayPal is standing tall with a really good stock price and a very good stock rise today. I'm an investor in PayPal. I've been an investor in and out of PayPal for, the last 6, 7 years. And it's been overall a very good, profitable experience. On this occasion, it's taken a while for the stock to even do anything, but it's really having a good day. And I'm hopeful that it's going to continue to rise over time. Now that more investors realize that PayPal is doing a lot of things right, like growing their business, generating more free cash, buying back shares. It's bought back a lot of shares in the last 2 years. And it's really set to continue to grow at in a profitable way. So all those things are good. I'm going to go through and take a look at their earnings, look at their fundamentals. I'll do a valuation of the company, and then I'll let you know what I plan to do with this stock, whether I'm going to buy more shares, hold my shares, or sell my shares in PayPal. Let's take a look at the company earnings. So for the second quarter of 2024, PayPal grew its revenue by 8%. So that's good. And again, they've had consistent growth for the past 2 years. They've been doing quite well. Their expenses have been a little out of control, but they really reeled them in. You can see that their operating income increased quite a bit, 17%. So that's really good. Earnings per share increased 17%. Great job. Total payments that they took through their network went up 11%. So that looks really good. The free cash flow is much higher than I expected. In the quarter, they did $1.4 billion of free cash flow. In the first half, they're well ahead of the cash flow I had expected from PayPal. So from a cash flow perspective, they just generate cash like you wouldn't believe. So I'm going to look at their cash closely and put it into my forecast as I value the company later. Overall, their balance sheet's in great shape. They have a lot of cash, $18.3 billion on the balance sheet, and they have more cash than they do debt. So they can pay off their debt immediately if they'd like to. The statement of cash flows was far better than I expected. If we look at the first 6 months of the year, the company produced $3.4 billion of cash from operations. And a part of that was the buy now, pay later business that they have. For a short while, about a year ago, they were having to carry that debt and really roll out a lot of cash for that business. But they have now arranged a partnership where they're selling off that debt and getting that cash back quite quickly. So that's really balanced out their statement of cash flows. If you look at the prior year, they had a negative outflow of cash for these loans and they weren't getting much back. But now they have that partnership and the cash should be fairly good going forward. The business doesn't require a whole lot of capital to be reinvested and keep it going. So the CapEx expense is only $311 million, while their cash from operations is $3.4 billion. So it gives them more than $3 billion of free cash flow in the first half. If I double that, that's going to be the run rate that I'm going to use in my valuation of PayPal is having a good day today. The stock is up 8%. The market cap of the company has risen to $67 billion. And the revenue for the company is $30 billion. Considering that they're a good growing company, I think that's a pretty good ratio. The PE is 16 in the current year, and it's going to drop down to about 15 if you look at forward PE. Analysts think it's discounted by almost 14%, and several analysts cover it, which I'll get to. When you look at the 5-year, you can see that it really sold off. It was really a valuable company back in 2021, but it's now worth about 1/5 its value. It's down big. But if we look at the year to date, you've seen a lot of choppiness, a lot of volatility, especially with today's rise. Where will it go next? When we look at growth, this is what I was talking about earlier. This is consistent growth year over year over year over year. And I just don't understand why the market hates PayPal so much. The company keeps growing their revenue. That's a very good sign of a strong business. In addition to that, I've already commented on the cash flow, but this is historically a very good cash generating company that I expect is going to continue to do so for many, many years. When we look at the forecast that other analysts have, 30 analysts cover it. And it's almost like a group think, hey, let's all hate PayPal. But if things are turning around, it's now a buy rating for PayPal. And analysts believe it's discounted. So that might help the company really rally, or the stock rally to higher levels, especially when you look at their earnings per share. They guided up on their earnings that they're going to do better than expected. And you look at the growth that they expected at earnings per share, and it's exceptional. So I'm really liking what I'm seeing with earnings per share, cash flow, revenue growth from the company. They have more cash than they do debt. Just a lot to be like about the business. And they delivered a nice growth number, a nice profitable P&L. So all those things look good to me on PayPal. So how desirable is the PayPal business? Is it a really strong business that is almost a monopoly and has a broad moat that's very strong, where it has few competitors, if any? Well, let's take a look at that, and I'll make a decision on how strong their moat is and how wide it is. Overall payment processing, PayPal does have competition. There's a lot of payment processors out there. Now, PayPal has been around for a long time. The brand is pretty strong. They have a strong network. They also are very creative, and they've made good acquisitions. For example, they have Venmo, which is a very popular payment app. They're into buy now, pay later. So these things look really good. They're also creating their own cryptocurrency, which is really interesting. So although I think that they're not clearly a dominant monopoly in their market, I'm going to put them in the gray and partially in the green. I think it's a good business. It has certain areas where it operates like a monopoly, let's say the Venmo business. But it does have a fair amount of competition in the US as well as around the world. It's one of the bigger brands. I really like their network. It's a desirable business, but I need to be able to buy a business like this at a discount. And that way I'm looking to get a really nice return over time as this business really gets priced more fairly to its intrinsic value of cash flows and earnings per share. So I believe PayPal is discounted in a big way. In fact, 88% discount on their stock. I think when you look at their earnings per share, it's discounted by 27%. But when you look at their cash flows, just really high free cash flows, I think it's discounted by 118%. Now, cash is king. Most good investors look at cash flow. That way we can determine the value of a company. Similar to the most valuable companies like Apple, Microsoft, Google, you look at their cash flows, they're very high and they continue to grow them. PayPal continues to grow their cash flow, and they look really good from an intrinsic value of all those cash flows that they're going to produce in the future. The earnings per share in my forecast is quite conservative. They represent a really nice discount. Analysts believe that it's a buy. So overall, this has been a discounted stock for some time, and it's good to see it rise. What should I do with my shares? Should I buy, hold, or sell? So let me look at the different aspects of PayPal and make the decision whether I should buy more shares, hold, or sell my shares. So first, the business. Do I like the business? Do I think it's worth having? And the answer is yes. I think PayPal is a company that has a few really good competitive advantages, and it's really solidly in the gray, which is an area where I could buy a company at a discount and see it rise in value. With regards to the balance sheet, excellent balance sheet. It has more cash than it has debt. Very comfortable with the balance sheet. And it has a tremendous discount. So I'm going to keep buying shares of PayPal. I already have a good sized position, and I'm going to be adding shares in hopes that the stock continues to rally. I think it was a wake up call today for a lot of investors that want in on PayPal. So I hope you found my video interesting, and I really appreciate you watching.